Bill, one of the things I've been hearing recently is all these advertisements on the radio and on the internet about these mortgage companies offering, no closing costs, no appraisal fee, discounted lawyers' fees. I mean, which is great. I mean, for the borrower. I mean, are those some of the programs or some of the capabilities that Fairway has as well? Or, how do you handle those situations?
Yeah, there's a famous jingle that you hear on the radio about $500 in closing costs. I mean, that's very common. What we do offer, and this is kind of a strategy we take with a lot of our clients and past clients, is we do a no closing cost loan. And the way that works is, and I'll give you an example, on February 3rd, rates on a 15-year fix are 3.25%. Okay, and if we have a client that wants to lower their rate on that 15-year fixed, we may offer them 3.375 with no closing costs. Okay. They take a little bit higher of a rate, but they save themselves in a couple $1,000s in costs.
Right.
And the reason that we do that is if are we out of the woods with the economy and the Europe situation and what's happening with rates in the future. If rates continue to drop, they can go ahead and refinance again and not chase their own money by paying costs.
Yeah, or if they plan on moving within a couple years or whatever, they're actually saving money by taking a slightly higher interest rate and not paying $2,000 or $3,000 up front for closing costs.
And that's how that works.
Right.
It's a pretty good strategy.
So the reason I wanted to raise that is I'm sure people who are watching this may have heard, like you said, the jingle and this and that. It's not just that one lender can do that. I mean, you can do that. You can offer alternative strategies depending on what the person's financial goals are, what they're trying to accomplish, whether or not they intend to sell their house within the next 2 or 3 years or refinance again. So long as they talk to somebody like you who's been in the business for 14 years, you can pretty much do the same thing or probably better most of the time.
It's better. I mean, you hear these constant advertisements, and how do you think they pay for them? They usually pay for them with the interest rate.
Exactly.
So they're going to take a higher interest rate than we'll normally give to make up for their costs. So we have low overhead. We're able to pass those savings on to our clients.
That's a great point, Bill. When I hear mortgage companies or banks advertising 24/7 on television, on radio, I start to think that costs a lot of money.
Yeah.
That has to be built into the interest rate. I'm probably going to pay more money to them on my interest rate versus Fairway, Independent Mortgage, and yourself. I mean, you pretty much are an organically grown company. You go out and you talk to people in the community. You have lunch and breakfast with them. You shake their hands. I mean, you find out about their life and their situation. I mean, you're not spending hundreds of thousands or millions of dollars on advertising, which I would expect saves your borrowers money in the long run.
Yes, absolutely. We're able to pass that savings along.
Well, that's fantastic, Bill. I mean, I just wanted to clarify that because I think there are some people who might get a little misguided.
Yes.
That if I just pick up the phone and direct dial the 800 number, which again, you don't know where they're dialing and where that phone call is being answered, that they're getting a better deal. And most of the time, that's just not true.
Right.